Hi, welcome back. We're here with Carissa Dirado from Premium Mortgage. We're going to continue our section on types of mortgages today. Today we're talking, I believe it's FHA?
Yep. We're going to be doing FHA today.
All right. First, before we get into the specifics about FHA loans, Federal Housing Administration, that's FHA.
Yeah.
It's a government program. There's a few government programs we're going to talk about over the next couple of weeks. Now, this particular one, where would you say, as far as the number of loans you do overall, what percentage is estimated that you do FHA?
That's a good question. I would probably put it around about 15% of my overall business. So conventional being the most popular, and then the government-backed loans. Out of all of those, FHA being the most popular government-backed loan that we see.
Okay, all right.
Yeah.
Now, we see on the agent side, when they do the appraisals, there's a taboo that FHA or a government program, you've got this inspection that it's a pain in the butt. And I don't really see that, to be honest with you. There's a few things, they look a little bit more closely at the appraisal for chip paint, bare wood, handrails, right?
Yeah.
For certain elevations, number of steps.
Yeah.
Outside of that, do you hear anything on your side that FHA is a little bit different in slowing things down, or not really?
Not really. You hit on the main points. Before somebody is to put an offer in, or as we're starting to go through the process, I always check with the realtor to make sure that they feel like they're, if there's going to be a potential issue with the appraiser and the appraisal coming through. But really, you hit on the highlights. It's the scrape and paints, and that's very specific to the outside of the house. And then on top of that, the handrails. So those are the most common things that we'll see get flagged underneath the government-backed appraisal. But really, those are things that you might need to be addressing anyway when you're purchasing a home.
Now, you bring up government-backed. What does that mean?
That means as a part of the mortgage process, the government is involved with the appraisal and the underwriter piece of it. So they have special guidelines that we have to adhere to on the underwriting end to make sure that our loans are good to go for the government piece of the backing of it. So it's the FHA, the USDA, the VA, things like that.
Now, one more question before you go into your deal here is, during the COVID-19 stuff, we across the country, I've seen other agents having, I don't want to say issues, but some FHA providers, I don't want to say messing around with, but changing the credit score, minimum credit score type of thing.
That we're not really seeing on our end. It tends to be roughly the same. I have seen maybe like a little bit of a tightening, but not really much that anybody else would notice. So maybe some files might need to have a little bit more of what we call reserves. Money sitting in a bank account that we wouldn't need for the transaction, but it makes the deal look good. And so usually these are like retirement accounts. So just as a standing operating procedure for myself, I always ask for the retirement account statement just in case something were to happen. We know that we have a fallback and it's already sitting in the file. I don't have to try to get it later.
Okay, excellent.
Yeah.
All right, well, tell us a little bit about what makes FHA FHA.
You got it. So what I'd like to do is a screen share to show you a little bit of what I have. This will take just a second to get set up. So on my screen here, you should be able to see a loan comparison chart. And this is actually a chart that covers all the different mortgage programs. And today, of course, we're going to be specifically tackling the FHA. So what I'd like to do is just zoom in a little bit here so we can see this a touch better. So FHA is on my left-hand side.
Perfect.
And David, can you see this okay?
Yeah, that looks good.
Perfect. Okay. So tackling FHA here, and I do have a highlighter that I can use if needed. So the down payment minimum requirement on an FHA is 3.5%. And this is all the way up to a 4 unit. So FHAs might be a great way to go if somebody's interested in a 3 or a 4 or even just a 2 unit property that might not be able to qualify underneath the traditional conventional.
They just have to live there, right?
Correct. Yeah, it does have to be owner occupied. And you actually cannot have 2 FHA mortgages at the same time. So if somebody was to already own a home with an FHA mortgage, they would be required to go contingent, meaning selling their home at the same time they're buying their future home if they were to push the next mortgage product over to an FHA as well too. So just something to know.
Okay.
So FHA is nice because of the down payment so low. It's a 3.5%. And then with it, up to the 4 units, as I had mentioned, you can do loan terms from 15 to 30 years. And one of the other nice pieces of it, which we sometimes use it specifically for this, is something called seller's concessions, which in this market's a little bit tougher, but if somebody is asset challenged, meaning they don't quite have enough money to cover the full down payment and closing costs, we can use something called seller's concessions. This does have to be negotiated in the contract.
Now, this is something we see more of with FHA.
Yes.
Correct? I mean, people may go FHA because they don't have, like your point, don't have the funds, cash on hand, right, to do closing and everything else. Mm-hmm.
Yeah, so this actually allows for 6% seller's concessions compared to our conventional loans where we're stuck with a 3% seller's concessions. So just for a quick example, let's say you're purchasing a home, $100,000 net to seller, but we don't quite have enough money to cover down payment plus closing costs. FHA allow for 6% seller's concessions. So for easy math, 100,000 net to seller, 6% seller's concessions. That new purchase price would be 106, and that's what would show up on the sales contract. And then we take that $6,000 and we actually back it off from the closing costs. So if the closing costs were $12,000, now we have closing costs at $6,000. So that might be a little bit easier to come up with fund-wise than $12,000.
Right, right. And I just want people to understand too, the home has to appraise at the $106,000.
Bingo, yes. I actually do have a 6-minute YouTube video on this as well too that'll go into more details. But that's just like the quick highlight of it. Now, credit score wise, the minimum threshold for FHA is a 620. So we can look at scores that are 620 or higher. I do want to point out Credit Karma and other scores that you see are consumer scores and not necessarily mortgage scores. So we do sometimes see a difference between the scoring models that somebody's looking at versus the credit score that we see. I've seen it both ways. I've seen it higher and I've seen it lower. So I just wanted to point that out, that that's something to know. Okay. Yeah, so really the big things is the down payment of the 3.5 up to 4 units. Can only have one FHA mortgage at the same time. Seller's concessions at 6% and minimum credit score of 620 to give it a go.
Now, the other thing is your PMI.
Yes.
It's a little bit different with an FHA than, let's say, a conventional.
Yep, you are correct. So the private mortgage insurance underneath FHA, if you're going with the 3.5% down, is going to be on it for the life of the loan. So that's what makes the government loans different. So the FHA also follows USDA, and where we have the private mortgage insurance for the life of the loan. And sometimes that's why we decide that maybe we don't want to go FHA, maybe we want to go with another program such as Sunny Mae or that if it's got better terms for the private mortgage insurance. And these are all things that we review at the time of the pre-approval, but we also review them again roughly around the same time somebody's going under sales contract in case there's a better loan option that they weren't originally pre-approved for.
All right.
Yeah.
Awesome. Well, now next week we're going to go over another government product, I think, VA loan.
Yep, that is correct.
All right. Thank you, Carissa.
Yeah, very good.
All right.
Thanks so much.
We'll see you next week. Thanks.
Take care.
Bye-bye.
Bye.